Hey everyone, welcome to our deep dive into a book that has completely transformed the way millions of people think about money, Rich Dad, Poor Dad by Robert Kiyosaki. This isn't just another book about finance, it's a guide to changing your mindset and approach to wealth. Over the next 17 minutes, we'll break down the key concepts in a way that's easy to understand, relatable, and hopefully a little bit fun. So, settle in. And let's explore how two very different dads taught Robert, and can teach you, what it really means to be wealthy. Let's kick things off by meeting the two central figures in this story, Robert's two dads. Imagine you have two father figures in your life. The first is your biological dad, who we'll call Poor Dad. He's highly educated, has a stable job, and follows the traditional path to financial security. Then there's your best friend's dad, who we'll call Rich Dad. Rich Dad didn't finish school, but he's built a successful business empire and has a completely different perspective on money. Poor Dad's advice is what most of us have heard all our lives. Go to school, get good grades, and find a secure job with benefits. He believes that financial security comes from a steady paycheck and climbing the corporate ladder. On the other hand, Rich Dad's philosophy is almost the opposite. He says, don't work for money, make money work for you. Instead of depending on a job, he believes in building wealth through investments, assets, and entrepreneurship. As we go through this story, you'll see how these two contrasting perspectives shaped Robert's understanding of money and success. Let's start by taking a closer look at Poor Dad's perspective. Picture this. You're at the dinner table, and Poor Dad is sharing what he believes is the best advice. He says, study hard, get into a good school, and secure a high-paying job. It's the traditional route, one that promises stability and security. But here's the thing. Despite all his hard work and education, Poor Dad never really got ahead financially. Poor Dad lived paycheck to paycheck. He had a good job, but also a lot of expenses. A mortgage, car payments, and the usual monthly bills. He was always worried about money, constantly stressed about paying the bills on time. Why? Because he was trading his time for money, and no matter how much he earned, there was always something that needed to be paid. This is what we often refer to as the rat race, running in circles, working hard, but never really getting anywhere financially. Poor Dad also firmly believed that owning your home is your biggest asset. But here's the kicker. While a home can be an asset in the sense that it might appreciate in value over time, it's also a liability. Why? Because you're paying a mortgage, maintenance costs, property taxes, money that's constantly flowing out of your pocket. This was something Poor Dad didn't see because to him, the house symbolized success and stability, even if it was draining his finances. Another critical aspect of Poor Dad's thinking was his fear of failure. He was always focused on playing it safe, avoiding risks, sticking to what he knew, and working within his comfort zone. This fear of taking risks kept him from exploring opportunities that could have potentially improved his financial situation. He was so focused on not losing money that he missed out on chances to make more of it. It's a mindset that many of us can relate to, staying in a job we don't love because it's a safe, or avoiding investments because they seem too risky. Now, let's switch gears and dive into Rich Dad's perspective. Imagine you're at your friend's house, and Rich Dad starts sharing his thoughts on money. He says something that probably sounds a bit strange at first. Don't work for money. Make money work for you. What does that mean? Well, Rich Dad believed that the key to wealth wasn't just about earning more, it was about understanding how to manage, invest, and grow the money you already have. Rich Dad didn't follow the traditional education path. Instead, he focused on building businesses and acquiring assets, things that would generate income even when he wasn't actively working. He taught Robert that money is a tool, something you can use to create more money if you know how. But to do that, you need to understand the difference between assets and liabilities. So, what exactly is an asset? Think of an asset as a money-making machine, something that puts money in your pocket without you having to work for it constantly. This could be a rental property, stocks, bonds, or even a business. On the flip side, a liability is something that takes money out of your pocket. This could be your car, your credit card debt, or even your house if it's costing you more than it's bringing in. Rich Dad's strategy was simple. Focus on acquiring assets that generate income and minimize liabilities that drain your finances. Rich Dad's approach was all about building a portfolio of income-generating assets over time. This is how he created wealth and financial freedom. He didn't just rely on a paycheck, he created multiple streams of income that didn't depend on his daily effort. This is the key difference between Rich Dad and Poor Dad. While Poor Dad was focused on job security and a steady paycheck, Rich Dad was focused on creating wealth through smart investments and financial education. One of the most important lessons Rich Dad imparted to Robert was the power of financial education. He believed that understanding how money works is the true key to success. This isn't something you typically learn in school, but it's essential for building wealth. Rich Dad taught Robert that it's not just about making money, it's about managing, investing, and growing it. For example, Rich Dad introduced Robert to the concept of cash flow. Cash flow is the movement of money in and out of your life or business. Positive cash flow means you're earning more than you're spending, while negative cash flow means the opposite. Rich Dad emphasized the importance of always maintaining positive cash flow, making sure your assets are bringing in more money than your liabilities are taking out. This is crucial for building and sustaining wealth over time. Rich Dad also introduced Robert to the concept of leverage. Leverage is using other people's money, time, or resources to increase your potential returns. For instance, you might take out a loan to buy a rental property. If the rent you collect covers your mortgage payments and leaves you with extra income, you've successfully leveraged the bank's money to make more money. It's about using what you have, whether it's a loan, investment, or someone else's expertise, to create more value. Another critical lesson was about the concept of paying yourself first. This means setting aside money to invest in your future before you pay any bills, taxes, or other expenses. It's a simple idea, but it requires discipline. Rich Dad believed that by prioritizing your financial growth, you're setting yourself up for long-term success. It's about making sure that every dollar you earn is working to create more wealth for you. Rich Dad also explained the importance of understanding taxes and how they impact your financial situation. He pointed out that the wealthy often pay lower taxes because they understand how to use tax laws to their advantage. This isn't about evading taxes, it's about knowing the rules and making informed decisions. For example, investing in certain assets or setting up a business can offer tax benefits that employees don't get. By being financially literate, you can reduce your tax burden and keep more of your money working for you. Now let's talk about one of the most significant takeaways from Rich Dad's teachings, the mindset shift. Rich Dad had what's called an abundance mindset. He believed that opportunities are everywhere if you're willing to look for them and take calculated risks. This mindset is crucial for financial success because it opens you up to possibilities that others might miss. Rich Dad encouraged Robert to embrace failure as a learning opportunity. He would say, "Don't be afraid to fail. Be afraid of not learning from it." This is such a powerful concept because it frees you from the fear of making mistakes. Instead of being paralyzed by the fear of failure, you become motivated by the potential for growth and success. Every mistake becomes a stepping stone toward achieving your goals. Another mindset shift that Rich Dad taught was the importance of focusing on creating rather than consuming. Poor Dad focused on earning money to spend it on liabilities, things like a bigger house, a new car, or luxury items. Rich Dad, on the other hand, focused on using money to create more money, investing in assets that would generate income and grow in value over time. This creation mindset is key to building long-term wealth. Rich Dad also introduced the concept of financial independence. This is the point where your income from assets covers all your living expenses, so you don't have to rely on a paycheck. Achieving financial independence isn't about getting rich quickly. It's about building a solid foundation of assets over time that will provide for you in the long run. It's about creating a life where you have the freedom to do what you love, without being tied down by financial worries. Let's dive into some practical examples and steps you can take to apply these lessons in your own life. Imagine you've got a bit of extra cash, let's say $10,000. What do you do with it? Poor dad might suggest putting it in a savings account or paying off some debt. That's not bad advice, but it's also not going to make your money grow. Rich dad, on the other hand, would suggest looking for ways to invest that money in assets that can generate income. For example, you could use that money as a down payment on a rental property. The rent you collect from tenants can provide you with a steady stream of income, while the property itself may appreciate in value over time. Or you might consider investing in the stock market, where your money has the potential to grow through dividends and capital gains. The key is to make sure your money is working for you, rather than just sitting idle. Another practical step is to start a side business. It doesn't have to be big, just something that allows you to generate additional income outside of your regular job. This could be anything from freelancing, consulting, or even starting an online store. The idea is to diversify your income streams so that you're not solely dependent on one source. This not only increases your earning potential, but also provides a safety net if something happens to your main job. Rich Dad also emphasized the importance of continuously educating yourself. This doesn't necessarily mean going back to school, but rather making a habit of learning about money, investments, and entrepreneurship. Read books, attend seminars, take online courses, whatever it takes to improve your financial literacy. The more you know, the better equipped you'll be to make smart financial decisions. One final practical tip from Rich Dad. Surround yourself with people who have the mindset and success you aspire to. This could be mentors, peers, or even online communities. The idea is to be in an environment where you're constantly learning and being inspired by others who are also on the path to financial freedom. It's easier to adopt a rich mindset when you're surrounded by others who think and act the same way. Let's explore another key concept from Rich Dad's teachings: the value of delayed gratification and long-term thinking. In today's world, it's easy to get caught up in instant gratification, wanting everything now, whether it's the latest gadget, a fancy car, or a luxurious vacation. But Rich Dad taught Robert the importance of patience and making sacrifices today for a better tomorrow. Delayed gratification isn't just about saving money. It's about making decisions that will benefit your future self. For example, instead of spending money on a new car, you could invest that money in stocks or real estate. Investments that will grow over time and provide you with more financial security down the road. It's about prioritizing long-term gains over short-term pleasures. Rich Dad also emphasized setting long-term goals. What does financial freedom look like to you? Is it being able to retire early, travel the world, or start your own business? Whatever it is, having a clear vision of your goals will help you stay focused and motivated. Rich Dad encouraged Robert to think about where he wanted to be in 10, 20, or even 30 years, and to make decisions that aligned with those goals. Playing the long game is crucial for building wealth. It's about thinking ahead, planning, and making choices that will benefit you in the long run. Whether it's investing in assets, starting a business, or furthering your financial education, the steps you take today will shape your future. And remember, true wealth is built over time, not overnight. So what's the big takeaway from Rich Dad, Poor Dad? First, it's not about how much money you make. It's about how much you keep, how you manage it, and how you grow it. Second, focus on acquiring assets that generate income and avoid liabilities that drain your finances. Third, invest in your financial education. Understanding money is the key to making it work for you. And lastly, take action. Knowledge without action won't get you anywhere. Start small, but start now. The sooner you begin, the sooner you'll be on your way to financial freedom. The difference between Rich Dad and Poor Dad wasn't just in their bank accounts. It was in their mindset and approach to life. Poor Dad played it safe and worked hard, but never escaped the rat race. Rich Dad took calculated risks, focused on building wealth, and ultimately achieved financial freedom. The good news? You can choose which path to follow. With the right mindset and actions, you can start building your own wealth and live the life you've always dreamed of. Ready to start thinking like Rich Dad? Grab a copy of Rich Dad, Poor Dad and dive into these lessons in more detail. Whether you're just starting out or looking to level up your finances, this book is packed with practical advice that can help you reach your goals. Remember, the journey to financial freedom starts with a single step. So why not take that step today? Thanks for hanging out with us today. If you enjoyed this deep dive into Rich Dad, Poor Dad and want more content like this, don't forget to like, share, and subscribe. Got questions or your own thoughts on the book? Drop them in the comments below. We'd love to hear from you. Until next time, remember, I hope you've learned something new today.